Hello friends, if you have fixed deposit, listen carefully. From 1st of April 2026, TDS rules on fixed deposit have been changed. New forms, new section numbers and new threshold and a brand new form 121. Let's decode what that means for you. So without any further delay, let's get started. Fixed deposit are safe and secure way of investing, but the interest we earn from fixed deposit is taxable. Earlier, it was taxable under Section 194A, but now the section has been changed to Section 393 under New Income Tax Act. Basically, in this section, bank deducts your TDS when your interest crosses a certain threshold. Now, the next question arises, what are the threshold and at what rate the TDS has been deducted on the interest on FD? So, for normal Indian citizen, the threshold is Rs 50,000 and the rate is 10%. But if you do not have PAN, the rate will increase to 20%. For senior citizen, the threshold is 1 lakh and the rate is 10%. Without PAN, 20%. And for super senior citizen, that is 80 plus of age, the threshold is 1 lakh and the rate is same. So, to conclude, if your interest is above these limit, your TDS is deductible at 10% with PAN and 20% without PAN. Earlier, for non-deduction, Form 15G and 15H were used, but now these has been replaced by Form number 121. It is a unified and age-neutral form, that is one form for everyone. In this form, you declare your overall income, deductions and tax liability, and if your income falls below the taxable limit, the bank won't deduct your TDS. But one thing is common, that is PAN are mandatory. If you do not submit your PAN, the bank will deduct your TDS at 20%. So now you may ask how Form 121 is helpful for you. So basically it prevents unnecessary TDS deductions, it improves your cash flow as you get full credit of your interest, it reduces dependency on ITR refunds, it ensures that bank deduct your TDS based on your actual tax position. Now let us understand this change with the help of an example. For example, you are a 65-year-old Indian resident that earn Rs 90,000 per annum as FD interest. Now, you just have this income. The threshold limit for senior citizen is Rs 1 lakh. So basically, your income falls under the taxable limit. So if you submit your Form 121, bank will not deduct your TDS. And if you do not submit your Form 121, bank will deduct your TDS at the rate of 10% if you submit your PAN. And if you do not submit your PAN, the bank will deduct your TDS on Rs 90,000 at the rate of 20%. So basically, if you submit your Form 121 and your income falls under the taxable limit, you will get benefited from Form number 121. Now let us discuss some important points which you need to remember if you are earning FD interest. Number 1. Always submit your Form number 121 at the start of the financial year. Number 2. Always ensure that your PAN is linked to your bank account. Number 3. Even if your TDS is not deducted, you need to reflect your interest earned on FD in your income tax return. And last but not the least, keep track of all your transactions across all the banks. Now, frankly speaking, it is very easy to say keep track of all your transactions and bank interest. But if the transactions involved are big and heavy, it is very difficult to manage them. Here's come the automation. It helps you in making your life so much easier. It helps in managing your transactions, your accounts, bookkeeping and even your compliances. For instance, the software which I use helps me in managing my bookkeeping, accountancy and even my compliances like my GSTR 1, GSTR 3B summary and even helps me in reconciling my GSTR 2B with my purchase register. It also gives me various real-time business reports that helps me in taking right decision at right time. This is not just an accounting software, it is AI accounting and ERP platform trusted by 1 lakh plus businesses from across 170 plus countries. It gives me everything I need to grow my business, right from accounting, invoicing, compliances, payments, inventory, expenses, sales and vendors. It is trusted by the smartest entrepreneurs across the India. So if you also want to try this software, the link is given in the description. So friends, to conclude, from 1st of April 2026, TDS on FD interest is simpler but stricter. With the help of Form 121, you can avoid unnecessary deduction of your tax if your income falls below the taxable limit. So do let us know in the comment, have you used this section recently?